Hello everyone, welcome to this week's weekly market view for Monday, the 6th of May 2024 to Friday, the 10th of May 2024. My name is Vishal. Let's get started. All right, so let's start with the Nifty analysis and let's start off with the monthly chart. And as we can see on the monthly chart, we have this bearish candle at the very start of the month. Let's move on to the weekly chart. And if you look onto the weekly chart, we did have a breach of the all-time high. What is interesting to know here is that whether this breach was more like a false breakout, inducing more buyers and then probably sucking all the buyers and then trying to move down. So this is something that is a little unusual, and one needs to be a little careful because this could probably just possibly be then the all-time high, and then the markets might significantly correct. If you look on the daily chart, and if you look at the daily chart over here, we had this strong move on Friday, and now we are showing a little bit of bearishness. So seems like what has happened is this price breach has led to a false breakout, and now majority of the buyers are probably trapped here. So this is more like a trap, and now markets are continuing to move to the downside. If you look at the demand zone from where the prices bounced the last time around, this was the area. And can the markets correct all the way there? We don't know, but seems like we are high in terms of the price and expensive in terms of the price. So in case if the market tends to gain a more bearish direction to the downside price, the way the prices are behaving right now. So on the intraday charts, pretty much this is what it is at the moment right now. We do have a gap level here. So we need to see in the coming days, how does the price react from this gap level, 22,173 to 22,126. But in case if this, if more supply zones are created on the way, then it's probably not going to allow this level to hold, and we might break this level and continue to move to the downside. So let's see, let's wait and watch. We'll take it step by step and see how the market phases out this week. Let's look at the next index. We are going to be looking at Nifty Bank. So if you look at Bank Nifty, let's start off first with the monthly chart. So Bank Nifty also, let me remove all the tools here so we can start from scratch. Yeah, so on Bank Nifty, we had this monthly level of demand, and it nicely held on to this level and trying to show that it is moving to the upside. A little bearishness on the monthly chart yet, but as I said that this is just the start of the month, so it's too early to say whether this candle will close as a bearish candle. Let's go on to the weekly chart. And if you go onto the weekly chart, we got this very strong rejection because of Friday's move. And now it will be interesting to see whether the market comes back to this area where the prices have broken this very strong resistance point and comes back to test it as support. So 48,661 will be an interesting area to watch out. In case if the market does close below this area, we might tend to move into slightly bearish to a consolidation phase on the Bank Nifty. If you look at the daily chart of Bank Nifty, we do have this demand area, but this demand area is not very strong at the moment right now. So the only reason why this area might also hold is because of this this pro gap over here, right? So just keep a close watch on this area here. And there might be a bounce coming in from this area. So in case if the markets tend to get a little bearish, this area 48,336 to 48,060 will be an area to watch out for as support on the Bank Nifty. Let's move on to the next index. We are going to be looking at the Nifty Financial Service. And if you look at the Nifty Financial Services, let's quickly have a look at that. All right, so on the monthly chart, financial services is also giving us a rejection as very similar to the bank Nifty. And if you see the Nifty financial services chart is very similar to the bank Nifty chart as well. If you look at the weekly chart, it's difficult to gauge this, but right now, if we apply the same theory or the same logic, then price may come down all the way towards this 21,630 odd level to retest this as broken resistance becoming support, and then we will have to see whether we get consolidation and a move to the upside, or do we get a close below this area? Because any close below this area will again then lead to a little bit of more bearishness to a consolidation phase on the Nifty financial services as well. All right. If you look at the daily chart, again, pretty much very, pretty similar to the bank Nifty. And again, we see that this is that area to watch out for. So I'm just going to plot this area. Maybe if you go on to the smaller time frame, there will be some kind of a demand level, 21,431 to 21,267. So in case if markets do react from this area, then we might see the markets coming down all the way towards 21,431 to 21,267. So this is financial services. Now let's move on to Nifty Mid Select. So we'll select Mid Select. And comparatively, the Nifty Mid Select is slightly more bearish as we speak. So if you look at the monthly chart, again, we saw this red candle, then we saw this green candle, and now we are again seeing this red candle. If you look at the weekly chart, again, very similar. Seems like as of now that this could be a false breakout, very similar to what has been created on the FinNifty as well as the Nifty. If you go on to the daily chart, we see that there are these consolidation candles here, and pretty much that market has not convincingly closed above these highs. So again, any kind of a false breakout could lead to a potential fall in the market. And if you see the last time around, the level of demand that actually held on the mid-cap Nifty was this area, 10,570. In fact, on majority of the indices, when the price retreats back to these areas, we had a pretty strong bounce. Now, is there a possibility of a further up move in price? We'll have to see that. But at the moment right now, if this turns out to be a false breakout, this might lead into more bearishness and we might lead more into consolidation. All right, now we are going to move from the indices towards the currencies. So let's investigate USD INR for this week, and let us load the spot chart of the USD INR. All right, now that we have loaded the USD INR chart, let's start our analysis from the monthly chart. So again, I'm going to remove everything from the chart here, and I'm going to start the analysis fresh. So we had a little bit of a pullback in price, and then we had a strong move. At the moment right now, the month of April closed as a consolidation, clearly seen as a doji, or you can call this slight indecision. But if you look at the weekly chart, after this very, very strong move in price, which is going to be this level of demand over here, we are just consolidating, right? So like I said, that any move coming into the downside might lead to another continuation to the upside. And also we can see that there is this gap level of demand here. And just below this gap, there is another level of demand, which is actually confluencing with the weekly level of demand, right? So this is also, or rather, these are two areas to watch out for on the USD INR. There is no supply zone, so we are not planning any kind of shorts, or should not be planned, because there is no overhead supply zone on the USD INR. So any pullback in price towards 83.15 to 82.95 can be bought into. All right, now from the USD INR pair, we are going to move to the heavyweights. So we're going to start off first with HDFC Bank. Let's start off the analysis on HDFC Bank, since it's having one of the highest weightages. And let's start off with the monthly chart. And I keep on saying this, that the monthly perspective always gives us a much, much bigger picture and not the intraday chart. So if you look over here, I've been continuously saying that this monthly level of demand, once the price came in here, you should not be shorting. And now we can see that slowly and steadily, although amidst whatever is happening in the market, HDFC Bank is slowly and steadily pushing up. Now, where can HDFC Bank go to? The first move that it can actually make is towards 1640 to 1723. Right now, obviously, if that happens, then obviously Bank Nifty is most likely to take support at that level and then move up and start printing all-time highs, the Bank Nifty. So let us wait and watch to see how does price shape up on HDFC Bank. And another very interesting level that has been created on HDFC Bank is actually on the 240-minute chart. And so that level is this area over here. So just let me show you. We have this rally-based rally level of demand. And just above that, we have this area here, right? So a lot of trading that has happened here. And then this is more or less the cleanest level that you can see. And what we expect to do is we expect to see a retracement in price and then a continuation right up to this weekly level of supply. All right, let's move on to the next stock, Infosys. So on Infosys also I have been saying and closely watching is that prices are now into this monthly level of demand. And these are levels that you should not be or you cannot be ignoring because these are higher time frame levels. And yes, price can go a little bit more deeper into these levels, but eventually the price has to hold and probably give a significant also move to the upside. So now that Infosys is into this weekly level of demand, and I will just plot it for you here. In the long run, we are expecting Infosys to move to the upside. And where can Infosys move? If we are able to remove this level of supply that is over here, then we might see Infosys traveling all the way towards 1544 odd levels in the short term. So keep a close watch on Infosys as we might expect to see the markets creating a move on both HDFC Bank as well as Infosys. Now let's look at the last stock for the day, Reliance. Let us start off with the monthly chart for Reliance. Let's remove all the tools. Okay, so if you look at the monthly chart, nowhere there is the closest level of demand. The level of demand on the monthly chart is situated at 2400 odd levels to 2216. So demand is far away on Reliance on the monthly chart. If you look at the weekly chart, we do have this level of demand. But now after investigating this a little bit more carefully, we could also see that maybe this upper level is a reaction to this level over here, right? So there is a possibility that in case if this rally-based rally demand level does not hold, Reliance could come down to test 2633 to 2570 on the weekly chart. And that maybe if that happens, then that could probably bring the Nifty overall down. As you can clearly see on the daily chart also, we have this rally-based rally level, which is coinciding with the weekly chart. All right, now the most fun part is going to be the open interest level. So we are going to start off first with the Nifty, and I'm just going to take you through the open interest levels because now we have this OI support and resistance tool, which gives us key levels and important levels on the Nifty chart. So if you look at the daily chart first of the Nifty, we can see clearly that 22,800 has been a very, very strong resistance, and that is where the highest open interest is. And if you see on the put side, we have 22,000 odd levels, but we also see a little bit of support coming in at 22,400. So how can we gauge what the market's move is going to be for, let's say, this week? So for this week, we can expect the market to be a little range bound from anywhere from 22,400 right up to 22,800 odd level. So this will be more or less a 400-point range. However, if 22,400 breaks to the downside, then more or less we are going to sooner or later see the 22,000 odd. Let's now change the chart to Nifty Bank. All right, what do we see now on the daily chart of Nifty Bank? On the Nifty Bank levels, just let's allow the graphs to settle a bit. So let me just remove all this since we don't need these graphs now. We just take them out. And then we'll zoom back into this daily chart. So now we can see here that 49,000, this is the daily chart of Bank Nifty, and we can see here that 49,000 is taking a little bit of a strong support. And this could also be because HDFC Bank seems like it's a little strong today, and that is what is supporting the Bank Nifty. So for this week, 49,500 to 49,000 is going to be the range. If 49,500 breaks to the upside, the next highest open interest level is 50,000. And if 49,000 breaks to the downside, the next highest put open interest level is 48,500. So if you look at the overall perspective, let's say if you're taking more of a monthly perspective, then we could be ranging between 48,500 to 50,000. But if you're more or less looking like a weekly perspective, then this could be the range, which could be anywhere between 500 points. Okay, let's move on to now the Nifty Financial Services, and let's look at the open interest levels on the financial services. So if you look at the financial services, the open interest levels are a little wider, right? So you can see the highest call open interest is at 22,500 and the highest put open interest is at 21,319. Now you can clearly see that there is a level of demand which is coinciding with this open interest level. So this is going to give us more conviction on this level of demand, because now we have a confluence of a demand as well as the open interest level. Let's move on to Nifty Mid Select now. Okay, so as you can clearly see, where the false breakout has happened, there is a open interest level at 11,150, and that is the reason exactly where where mid cap select is actually halting. And to the downside, we see 11,000. So if 11,000 breaks to the downside, then we might see a 200-point move closer to 10,800 levels, because that's the next highest open interest level. And if 11,050 break 11,150 breaks to the upside, then 11,300 is going to be the next level on mid cap. So in this, we are able to gauge what the range of the market is thanks to this open interest that is automatically plotted on the chart. And because this is dynamic, it keeps on shifting as and when the market keeps on adding more build up towards the call side as well as the put side. Let's look at now the open interest on the USD INR. So as we can see here, this open interest tool not only is plotted on the indices, but it can be clearly seen on the currency as well as the commodity charts. So here we can see that 83.75 is a strong level of resistance for the market. It has the highest call open interest, and 81 is where we have the highest put open interest. But before this level, we also have these levels 82.13 and 82. And here we can clearly see that there is a level of demand which is situated within this open interest level. So in case if the markets do not respect these levels, obviously because this is a level of demand, but there is no confluence here. And if price tends to break and come all the way here, then this is going to be added confluence to go long at this 82 level, and 82 also being a round number. Let's look at the open interest levels on HDFC Bank now. HDFC Bank. Perfect. So this is the daily chart of HDFC Bank. Like I said, we have a level of demand here. We also have an open interest level confluencing here. But before that, we have these obstacles in between 1550, 1570, 70, and then 1600. So unless and until we cross these resistances to the upside, getting towards 640 is not going to be easy for HDFC Bank. Similarly to the downside, 1400 is very, very strong right now in HDFC Bank. So we are expecting the market will not break the 1400 level. Again, this is in context that everything is normal in the market and there is no normal situation. Let's move on to Reliance. So on Reliance, we see 2800 as the highest put open interest, and we are also seeing a little bit of support at 2840. There is also another level of demand here, and maybe that is where the Reliance prices have halted for a bit. 2900, 3000 to the upside, and 2800 and 2700 to the downside. So keep a close watch in these levels in the coming days. And last but not the least, we are going to be looking at the open interest levels for Infosys. And here you can see that open interest is the highest on the put side at 1400. So 1400 is going to act as a strong support. And the expectation is that on Infosys, Infosys should not break this 1400 level and start moving first towards 1460 and 1500. And then later on, it might even go to 1600 audience. So in this way, we can use the open interest level along with whatever technical analysis indicators that you are using to get a much, much better conviction and confidence of your levels. All right, I hope you all enjoyed this analysis for this week. And if you do enjoy our analysis every week, do hit the like button and subscribe to Sher Khan Education. And please do give your valuable comments on how you found this session. Take care, everyone. Have a lovely week. Trade safe. Goodbye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.